Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you on Tuesday, November the 28th. The year's 2023. Let's talk trading. Crucial mistakes, part 3. These videos are for educational purposes only. Your results may differ from mine. And just a reminder, don't make the crucial mistake of not having your risk management in place. Never lose more than you're willing to lose on any one single trade. So, we talk about crucial mistakes. It usually gets down to something that you're doing or not doing, as Walmal and I talked about that yesterday. And the thing is, most traders, rather than look in the mirror, they looked for a new indicator, change the indicator settings, some magic numbers. They look for a new system. They look for a different pair. They look for a different broker. They look for anything other than looking in the mirror and saying, what do I have to change? What do I have to do different? Because if you keep doing the same thing and you expect different results, you're insane, right? That's insanity. It's pretty simple, right? So, what's the reason that's so difficult? Well, part of the reason is it's how we have been conditioned or programmed. I mean, we see advertisements all the time. Take this pill, buy this, whatever, and your life's going to be better. We're conditioned for that. That's at least those of us who come from, Western society, especially here in the U.S. I mean, each and every one of us is conditioned to look outside ourselves for the solution. So the question is, how do we stop that? Well, first thing to fix a problem is to recognize the problem. So if you recognize that's what you're doing, you're already halfway there. And, it's pretty much that simple. But I don't know how many other places you can go to hear that information, especially here in the trading world. They're going to try and sell you a system, an indicator, something. But, it's just one of those hard truths that the crucial mistake that most traders make is to look outside themselves for the solution. There's a few new trading psychologists out there, and there's a few books and courses. But once again, you have to be careful because, they're selling something. I mean, and with the internet now, you can find the answer to almost anything on the internet for free. And some people might retort, well, you get what you pay for. So you have to be careful taking free advice. Yeah, so be careful taking what I say, right? I'm just some disembodied voice that you hear while you watch these videos. But, there's just certain basic truths. I mean, when it gets down to trading, you're going to enter at a level, you're going to exit at a level, And to me, it just gets down the horizontal lines. You can forget all the other fancy stuff that we put on the chart. But, you know, it's just horizontal lines. That's all it is. So, you know, you could have entered here at that level or that level or that level with the candle color and made money. I mean, you could always say, well, what if it reversed? Well, that's why we have a stop loss. You see, in trading, as I mentioned at least more than once, right? It's not like, you know, going in the kitchen and following a recipe. Because you go in the kitchen, follow a recipe, you know, 99 times out of 100, if not 100 times out of 100, you're going to get exactly what you were cooking, frying, baking, sauteing, steaming, whatever. You follow the recipe, you use the right equipment, you don't change anything, you don't leave anything out, you just follow that recipe, and it turns out okay. Now, every now and then it might not work. Maybe you had maybe the baking powder or baking soda was too old, so something didn't rise like it was supposed to. Or, you know, or maybe some other ingredient wasn't quite up to par. So it's not really the recipe's fault, it's the ingredients. But, you know, you did exactly what you were supposed to do. And like I said, usually about 99 times out of 100, it's going to work out or turn out okay. It's funny, I talk about cooking because I was at a friend's house and we were talking, and his mother and father were there, and I said something about cooking, and he said, "You cook?" And he said it with, you know, the look on his face. He was surprised. I go, "Yeah, cooking's simple. It's just putting heat to meat." And he just laughed. He said, "I never heard anybody say it like that." I go, "Well, that's pretty much it. You just put heat to meat." You know, if you're talking about cooking meat, you know, or heat to vegetables, I mean, or heat to some liquids, or heat to some mix. I mean, that's all it is. You know, there's, like I said, there's some prep in there. There's some, you know, assembly, and then just using the right temperature and the right pan, and then taking it out or off the heat when it's done. I mean, it's not that difficult. And see, the thing about trading is it's not that difficult. It's not that difficult to click the mouse and enter a trade. It's not that difficult to click the mouse and exit a trade. So where's the difficulty come in? Well, we go back to that plan and your failure to follow it consistently, regularly, without fail. Because if you're honest with yourself, you don't have to be honest with me, but if you're really honest with yourself, you are not winning overall because of your failure. It's not the system, it's not the method, it's not the indicator, it's not the broker, it's not what you're trading, it's how you're trading it, right? I mean, we sit here, we look at these charts day after day. Some of us walk away with more money and some of us walk away with less money. And so you got to understand what's the difference that makes the difference. Those who walk away with more money, yes, they got lucky. Because remember, every win is luck because you don't control the outcome. But what they did do, they controlled their losses much better than those who walked away losing money. And sure, some of the best traders are going to have losing trades. That just goes with the game of trading. It's just that simple. And that's just, you know, that's just a fact. that you have to come to grips with. You're not going to win every trade. And the sooner you come to grip with that fact, the better. And you have to make sure you're managing your money and not the emotion. Because if you have a losing trade, and then you add to it, now you have an average in, and now as soon as that average in price turns green, you exit. It feels good to exit with green, but you exited one trade green and one trade red. But overall, you were green, and that just feels better than maybe taking a loss on that first trade and either taking the next signal and making it up or making part of it up, or maybe you make it up and then some. So there's something inside of you that prevents you from doing it. Trust me, I know. I hate to lose, big time. So if you hate to lose, you have to change what a loss means to you. It's just part of the game. You know, you don't make every shot, you don't make every, every putt, you don't make every, hit the ball every time you swing at it. That's just not the way things work. Not in these competitions. And, trading is a competition, if you think about it. The score is how much money you make or lose. You're trading against every other trader who's trading the same instrument. So it is competition, even though it might not feel that way. Some liken it to war. It's like, yeah, you have to, outmaneuver your opponent and overcome them. But, we sit here, we look at these charts, and it just looks so simple. We had a price was moving down and hit that line. Right now, you could be up about a pip or so. And now it just would have taken it back because this broker, we've got that spread there. And so that's what happens. And the other thing is patience. If you want the big pips, sometimes you got to wait a long time. I mean, here, this 5-minute candle, that shot up over 15 pips. That's kind of an anomaly. Doesn't happen that often. Feels good when you get it, though. I mean, if you would have gone long and got 40, the launch pad, could have made 15 pips in 5 minutes or less, that would have felt really good, right? But you see, that's one of those things where you just get lucky. You just got in at the right place at the right time and it moved. You didn't do anything other than execute your plan, which was candle color at the line. First line it comes to. Not the second line, but first line. At least that's one of the ways I trade. Because you don't want to get in too late. And so you see all this green over here, and then you see all the red over here. So if you were to take this one, I would have just, take that quick pip, be done with it, because you're kind of swimming against the green here. So, fellow traders, I haven't seen anybody admit to any crucial mistakes they think they might be making, but that's okay. You don't have to if you don't want to. But one thing you might want to do is definitely subscribe to the channel and click the bell, because I hear YouTube's changing things, so you might not know when I put out a video otherwise. So, fellow traders, always remember and never forget, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.